But let me tell you the opportunity that a 6 to 7% interest rate market presents relative to a 2, 3, 4% interest rate market, which is that right now, especially with the market, it is a buyer's market. So there's more opportunity to win a contract. There's less competition in the market. So it's actually an opportune time to buy, even if the interest rate isn't optimal. The interest rate not being optimal is the reason why there's less competition in the market. So if you are a borrower who may not have the highest amount of down payment savings, may not have the best of credit, this is the market to get your loan approved. I personally think when buying, it should be illegal to know the financing details of the buyer because it just makes it so that sellers can discriminate and say basically I'm not going to accept anybody with an FHA loan. I'm not going to accept anybody with a VA loan. That's like to me a form of discrimination that somehow is legal. A person selling their house should not know the financing details. And in fact, when I go into contract, regardless of how much down payment I'm going to put, because ultimately those numbers can change in the contract, I'll just list 20% because why not? It could be 20%. The seller doesn't need to know. It's none of their business. So if people are having hard times getting their contracts accepted because they're putting FHA, well, I wouldn't let them know. I would just say other loan, like other loan. So I say that because that's another tactic to help ensure that the loan will be originated. And if you feel pretty confident your loan will be originated, another way I go about my negotiation is I make my money hard earlier. Hard means my earnest money deposit will be non-refundable at an earlier date to help the buyer feel comfortable with accepting my offer.